Good morning or afternoon, depending on where you are. Welcome to today's episode of Market Check, brought to you by Because Bitcoin, of course. I'm Snorlax. You guys also know me as Tommy. I'm joined, as always, by Tucker, Max, and Will's Outlook. Today, we have a special guest, however, Mr. Spread, who is a friend of the brand. You'll see him very often on our Twitter spaces. He does a phenomenal job, so make sure to give him a follow. And really excited to have him on the show. Really excited for today's show. I feel like after we squeezed overnight. That was one of the things that we talked about was possible yesterday was, maybe we get some sort of shenanigans around the lows on Bitcoin. And then, where do we go from there? Right. I feel as though the backdrop that we've now created for Bitcoin is one of which that's going to reflect continuation, or it's one that, is probably going to be another BART. You can see that we're testing, that previous level of supply, that capped price prior. Will it do so again? I guess we'll see. But I think the structures of altcoins right now are possibly suggesting that maybe downside isn't over, at least not for those assets. Bitcoin and Ethereum are probably, they have to be classified, I think, a little bit differently until they actually break their market structures. Despite altcoins, already doing that, some of them on a high time frame level and having pretty negative momentum, I would say, to the downside. On the flip side, you have equities, right? We have CPI tomorrow. It is, I think it's going to be a hotly anticipated CPI, maybe not in the sense that you see a ton of volatility on the day of, but given that we're seeing more and more volatility in the CPI prints, that's probably going to cause problems down the line. So I am kind of curious about what that means for markets into the end of the year. And that's definitely something I want to talk about, kind of how we're approaching CPI from a trade standpoint, as well as, for this week, as well as next week, of course. But yeah, no, I mean, I think that pretty much sets the stage for the episode. We got a full panel, so I'll go ahead and, I'll be done giving my little spiel. I'm going to open it off with Mr. Spread. I'd love to get your thoughts on the markets, kind of what you're seeing, and maybe any charts that, really just jump out to you, Mr. Spread. Welcome to the show.
Hey guys, good morning, good day, good afternoon from wherever you are. Thanks for having me on the show. You know that I'm watching you guys from the shadows, and also I'm there writing some comments to Will, sometimes some comments to Max, to you guys. I watch you, so I want to say congratulations for whatever you're doing. It's really not easy to keep building and keep providing valuable content during this bear market. I really think that is one of the most brutal bear markets that the crypto space has seen until now, and I don't think it's over. So I still think that we still have some pain going forward. Some people will ask, well, how much pain we have? Well, how much pain the price wants. And people think that I'm too bearish sometimes, or in the bull market I was too bullish, when in fact I have to agree with Will that I was just following the price. If the price, or if the macro structure on weekly or after that on daily, to me, tells me that the asset that I'm following is bullish, I'm going to be bullish. After it's breaking it, I'm going to flip it. I have enough experience and adaptability to flip with it. And if you're asking, Snorlax, regarding some of the charts, for me it was kind of obvious on the 17th when I was on Because Bitcoin Twitter space. If you guys remember when Naka was going wild and he was screaming regarding Ethereum, it's like we're dropping, we're going to Goblin Town. Since that evening when we dropped under 27,500, for me the whole market structure changed. Now some guys want to still have the confirmation under 24,800. Some people still want to have it under 25,000. I think in my opinion, at least, until we don't get back above 30 and stay there for a weekly close and go higher and take out the previous highs from 32, I will remain in sell the rip mode. And let's share some screens, share some charts.
Mr. Spread, what do you make of this little pump that we had last night? Or maybe pump is giving it too much credit. Maybe it's more of a squeeze, if anything.
Right.
Because I've seen some people in the comments saying like it's over for the Bears now after something like that, and I would profusely and adamantly disagree with that. But what do you
Why,
make
Max?
of that?
Well, why would you disagree with them? If you disagree with them, you take our market away, right?
Yeah.
I mean, If everybody would be on board on the same direction, from whom we would take money or from whom would they would take money. But I just want to just watch the market structure just a little bit, just up until to this point, right? And I think around this point, okay, so we went, you remember, after FTX and all that shit, what happened? We went above 21,000 and we had this retest and we started going higher and higher. So this was a bullish structure, no question about it, right? Now, up to this point, and I tweeted it quite a lot, that this would look like distribution. And this was the first time, I think this around this area was the first time when the BlackRock news came out with the ETF. And I said, although we didn't break because the sentiment was so bullish on it, I said, I'm gonna short Bitcoin for the first time. For the first time since we broke above 21K, I was like, you know what? There is too much hype, there is too much bullishness, and I'm just going to short Bitcoin. So I think around this area, I shorted Bitcoin, and I just kept it. And if until that point, I was bullish, right? If until that point I was bullish, and here I flipped bearish just because of the sentiment. If we lose this market structure, and if we lost this market structure, for me, it was done. And okay, I'm gonna remove this. You can do whatever, and of course there is no perfect analysis, there is no perfect strategy. But in my opinion, when we lost and we didn't have the same behavior from the market participants, like for example, we had here, we had the bounce. We had here, we had the bounce, smaller bounce than this one, because this was money coming into the market. The second leg was just money moving from the altcoin market to Bitcoin. But here, for example, I cannot not see it, right? From here, it should have had at least, I don't know, 34, 36. But this changed. So something changed here in the behavior of the market participants, and this changed. Okay. Now, was this a head and shoulders? Was this not a head and shoulders? And we're going to see it dropping lower? Have no idea. But what do I know? That yesterday, this was not a good place to be short because of the poor risk reward. However, until I don't see it at least above 28,500. So I'm going to short it here when it's going to come. I'm going to short it here. And only above 28,500, I'm going to stop. So here in this area, I'm going to be neutral. If Bitcoin is going to go above 30K and it's going to stay above these highs for like, I don't know, 2-3 days, and after that a week, and print another high, I'm going to flip bullish at that point in time. And I'm also going to add at my current spot holdings. But until then, I'm going to short this strip. I'm going to short this strip. And after this area, I'm going to be neutral.
It's a good strategy, man. We've got a very, very similar one. I mean, momentum has basically all but fallen off of a cliff, and that's also represented in the death cross. We talked about the death cross a little bit. You know, it's the 50 daily SMA crossing the 200-day SMA. We've been, I mean, all that is it's a materialization of, you know, what we've been talking about for months, which is Bitcoin's been distributed above 30K now. Momentum has been falling off of a cliff. No new money is entering the space, and we're actually starting to see it like truly slide down here. I'll say this, the little squeeze that we're seeing right here off of 25K yesterday, I don't think that it invalidates the bear thesis whatsoever. I actually think we're going significantly lower, and these little squeezes and these little temporary pops off of support are not uncommon. This is typically the type of price action that you actually see right at the very tail end of a range before a breakdown. So yes, technically we are at support, right? 25K is technically support. I just don't think that there's true demand there. I really don't. I think that the fact that we came back to it a second time like this and we're just moving horizontally on support, I don't care that there's a little squeeze overnight. I'm actually fully expecting this thing to bark.
But we talked about this in the meeting yesterday too, Max. Keep that in mind. And I think we talked about it in the GigaChat chat, and people were like, "What would be the catalyst for price to go up? It's just going to break down once it's 25." There's nothing there, and I wouldn't say there were people that were discussing that type of scenario, and I was like, it's not about necessarily spot bids. I was like, traders will trade that zone because it's liquidity, right? They know there's liquidity there. They know there's buyers. They know there's sellers. So they're going to trade that zone and continue to chop this thing for a little bit longer. So the anticipation was you hit that 25K, you're going to create demand, whether it's fictitious demand or real demand. And I think people don't understand the difference between the two. Whereas real demand is more spot and fictitious demand is more traders trading into the range. And I mean, I think these are two things that you have to look at. And I think if you were to like pull up, I would say, for instance, Mr. Spread, you pull up your volume, you actually lost volume originally right around your 25K zone, the original 25K zone.
Wait, because this is Binance and we know what they did with that fucking watch trading. Let's watch it on Coinbase.
Yeah, you'll still see a similar move on the volume chart right here, right? So if you were to kind of zoom out a little bit more there.
You want on weekly?
Well, I mean, just time frame. You'll see your volume has more of the chart. You'll see your volume has been kind of waning down. It's been kind of dropping, right? So you had lower and lower volume kind of coming in, even at the higher zone. So if you go back, drag that all the way back to the original 25K move, the top end range. Yeah. So do the line again. Just do it from 25K.
From 25K.
Back further. Actually, just draw the line all the way back to the low on the volume chart. The original low.
Will, do you have your chart up?
You want to put your chart up? So
yeah. Let me pull it up.
Will's direction.
Yeah.
And after that, I want to answer something to Max regarding the death cross or the golden cross or whatever. And after that, the liquidity, the death cross. I think like the golden cross, that's just some market.
It is. It's very dramatic, is what it is.
Oh man, look, I have PTSD from death crosses. I will say that.
Hey, we got the pump. We got the scam pump into the death cross. You know that.
You guys can see you guys can see my screen, right?
Yeah.
Now, yes.
Yeah.
So, all right. So if we were to take this even to Coinbase, for instance, let's get rid of that.
Can you remove?
By the way, this was like the easiest trade ever.
Squiggle.
Breakdown. Gone.
Take the squiggles off. Take the squiggles off. There you go.
What are we on the monthly here, Will?
Yes.
I was just kind of showing like the move. That's the W. But let's get it. No, we're gonna drop it down. All right, we're gonna drop it down. I know you guys want it high time frames. Let me try. I'm trying to find a Coinbase chart. Give me just a second.
I think you were just on it. Right?
You were on it.
Even if we were,
gotta organize that watch.
I missed it.
Will,
right, so,
world record for the longest
but this is really relevant. Will.
All right, let's not look at that. Let's not look.
You know what that means,
like,
right?
A lot of people haven't paid attention to
move.
That, right? Look,
that means this is all distribution.
Look here on the daily.
Exactly.
I think
what I mean by this right here specifically. So this has been the trend the whole time. So
the volume is falling
kind
off
of similar to like an RSI trade. Good. Yeah. The volume's dying down. There's no volume. So this is your spot bid and trading going away, right? Now this can be read two ways, right? It can be read as in we're coming into support once your volume kind of bottoms out, or it can be read into we're going to go into another markdown phase, right? It can be read into two different ways. So traders look at this and observe it in two different ways. So I like to acknowledge both in that scenario. One thing I would say on the spot bid, if you were to like right now, we're on a 12-hour, for instance, right? Time you've kind of come into this range, you've created kind of this buy volume out of it, right? And then you pull back into, and then you come into this range and you create this buy volume out of. And now here, they didn't come back into this range, right? They basically fictitiously kind of try to float the market back up again without any type of retest of the low on the RSI, pull back out of, and then ran back into the range again. So it's kind of questionable here of whether or not this holds, because like we're in that area of liquidity where they like to bounce, and we didn't just go into it. We went through your initial support here to the low. So you kind of shocked the market here, right? This is why I've been kind of like more adamant of sit here and play this to chop people out of the position. If they're going to do another markdown phase, they do it later.
And then real quick, is Will a little bit choppy for you guys?
It is. Yes,
extremely.
And also
Hey, Will. Hey, Will, you might need to go reset your internet, man. It's a little bit questionable. Can you hear me?
Okay.
He's like 10 seconds
yeah,
behind us.
I can hear you. Just a second.
I think when he's just sharing the screen.
Okay, it's kind of laggy. I don't know if it was on my end or his end. Like I can hear him.
What about now? Is that better?
Yeah.
So far, yeah. We might have to.
Is that better?
So far,
it's good. Everything's good.
Yeah, that's pretty good.
All right,
that's moving pretty good.
That's
good. Mr. Spread, what were you going to say?
Right.
You were going to respond to me. Something about the.
Let's
definitely getting a lag now.
Let's let Will finish.
Okay, go ahead, Will.
No, I'm not going to lag out again. I had some stuff running. It was kind of bogging down, so it's fine. So here's your low here. Here's your low here. Here's your low here. Here's your low here. And then over here, they never finished out, right? They never came back down and retested. So false move to the high, come back down. Here's your low here. Do they swing this back up again? Right? That's the question here. I know it's not what everybody's thinking. It's not what I'm thinking. But I'm saying like we shouldn't rule it out, right? Like we should not rule that out. And now does it mean it's going to come tomorrow or the next day like a lot of these people are saying? No, I don't think so. I think we continue to do this for a while until the market decides, is this going to be another markdown or is it going to be a markup? A lot of people don't understand the markdown markup phase. And the markdown markup phase is, can I find buyers higher? If not, I have to find buyers lower, right? You cannot stay in a zone and stay stagnant in price. You have to move one direction or the other. As a market maker, all market makers know that. That's why they move one direction or the other. That's why they couldn't find buyers or they couldn't find sellers lower here. So they had to mark up, right? And then once you've started a markup phase, you've now induced FOMO. And now you got people to distribute to. So then they distribute and then they mark up. And then they distribute and then they mark up. And then they distribute and now we're marked down. And a lot of people don't realize this could be a distribute or a fake accumulation and then maybe another markdown. So this is what I'm anticipating. I'm anticipating 3 up, 2 down, whereas I think a lot of bulls are looking for up, but up already happened. I mean, if you were looking at this from a channel's perspective, you had your channel, you had your drop, you had your retest, you're rolling sideways, you could still continue down to refill the gap. There's so many inefficiencies at the lower price range here. It only makes sense to get into that 20K zone. But are we going to move into it quick and recover fast out of it? Or are we going to scam wick up pretty high, maybe retest a low, get people super bulled in, and then create exit liquidity at the higher ranges? You know,
what level is that? What level is that? What was the value there? I'm really curious.
28,280. I was thinking 28 is what was my high.
So like I said, it's just a zone around 28,500. I'm gonna stop shorting because from 28,500 up to 30K for me, I'm neutral, and I'm gonna add something here when you're gonna finish because it's important.
I mean, this goes to exactly what you're saying, Mr. Spread. Like this is the range that a lot of people got to pay attention to because you're going to get squeezed out if they keep on doing this, right? It doesn't matter which side of the you could be long, you could be short. You're getting squeezed out of this range. But people have to understand right here, you're stuck between 25 and 28K. If your stops are anywhere in between there, you're going to get wrecked. So doing high leverage trade here, it doesn't make sense. But if you wanted to be short, I would say ideally you're always wanting to short the pumps. That's all you're wanting to short. If you want to be long, you're only wanting to short support, which is at the lows. Now, eventually one of these sides are going to give. I think it's going to be to the downside is where it's going to go, personally. But it doesn't mean that we can't sweep the high before we sweep the low. That's all I'm trying to put out there. I just wanted people to kind of keep that in the back of their mind with this price range. Like I know we already swept the high. People's anticipation is to go down, but they could do it again, right? This is a very predatory price range. And there's a lot of price history too here. It's not just confluence over here. It's confluence over here. Keep in mind, they swept high here, and then they swept high a second time over here before dropping it down. So just some food for thought. Again, more accumulation over here. You're kind of sweeping all the same range. But you go ahead, Mr. Spread, if you want to hop in there.
If you know, you know.
Yeah. There are so many aspects that I want to touch upon. And I don't know. I haven't seen what Evan wrote, but I've seen some answers like Hagrid said here at 23K. There are two misconceptions in my opinion, and there are a lot of misconceptions, but there are two. A trader can also be an investor. And if you have to separate when we are talking, because maybe people don't understand. For example, right now I'm exposed to the market, but I'm exposed to the only asset which I think can perform well, both to the upside and much better to the downside compared to the altcoin. So I have exposure to Bitcoin, just to Bitcoin, right? So I have around 23% exposure to Bitcoin. If it's going to go lower, I'm a happy camper. If it's going to go higher, I'm a happy camper also. I'm going to rotate to some altcoins until I'm going to see total cap growing. This is number one from an investor perspective. Number two, when I see emotional answers in my Twitter space, in my Discord, whatever, it just means to me that those people are highly in cash or are highly exposed.
That's exposure on both sides. Keep in mind, Mr. Spread. It's exposure whether you're liquid or illiquid. Right?
Exactly. So
they're just over leveraged on both sides.
Of course, you're going to have this kind of feelings, either of FOMO, either of fear. For example, right now, if you're 90% exposed to the market and you see that we just broke under 27K, you're going to have some reactions to the market and you're going to say, oh, yeah, we're going to moon. But if you're going to see it here and you're not exposed, you're going to have different, you're going to have different type of feelings. What I want to say is that from a trader's perspective, I have no problem in flipping as soon as we go above 30K, like I was showing before. If we go above 30K, good, I'm going to flip bullish because the price is going to be bullish and I'm going to write that. What do I do as a trader and what I have learned in the last 13 years, almost 14 years since I'm trading, is that I go on high time frames. This is my framework. I go on, let's say I just open right now a chart. Doesn't matter what chart it is. I go on weekly, and after that I go on daily, and after that I see which is the strength, which is the strength. For example, Bitcoin had strength as long as it stayed above those levels and as long as it stayed in that momentum trade. And I was buying the dips on that kind of trade. I was buying the dips on my spot bag, and I was also longing just on Bitcoin. When we lost that momentum on the 17th of August, I cannot remain on the same type of mentality, on the same type of framework, meaning I cannot buy the dips anymore, and I'm going to short the rips. I'm going to short the rips up to 27,500, and after that up to 28,500, and between 28,500 and 30K, I'm going to be neutral. When we're going to flip above 30K, I'm going to turn bullish. I mean, why do people need to overcomplicate this? I have no idea.
Yeah, I mean, what you're saying is spot on. That's the thing. It's unemotional investing. So a lot of people don't want to hear, yeah, if we flip 30K, I'll be bullish. Like a reclaim of that 30K level with the appropriate volume coming in, that makes a lot of sense to be bullish. Or even 28, I think we were talking before, 28K, 28.5, a level like that gets flipped, you've got a real potential reason to be bullish. But until then, we've got a lot of heavy supply above head. A lot of that supply was induced, or in my opinion, arguably manipulated, because we were promised a lot of spot Bitcoin ETFs and approvals and BlackRock. And really, at the end of the day, the only one that was purchasing spot Bitcoin was Michael Saylor on that last pump from 25 to 30K. It wasn't family offices or high net worth individuals front running the institutions or anything like that. It was Michael Saylor buying, and then a bunch of derivatives apes just basically bidding 25K support. So there's a lot more reasons to be higher time frame. And when I say high time frame, it's high time frame for me. All right, that's the difference. High time frame for me is like 3 months out, 4 months out. All right. There's a lot more reasons to be high time frame bearish than bullish after the price structures that we've just formed all throughout basically, April, May, June, July. A lot of that is distribution. And we've talked about momentum on here numerous times. Momentum for an asset like Bitcoin or anything, right? Equities, Bitcoin. It's not like a jet ski that you can just quickly like U-turn and pivot. Okay. That would be the equivalent of a V recovery. Momentum for Bitcoin here, it's like a big naval ship or big cargo ship. It's going to take a long time to turn around. So momentum is dwindling here. Yes, 25K is holding for now, but I also think on the lower time frames, if we are going to actually get the big short that's coming up right now, this is that level that we're going to see a bark from. This is the level. Like I'm pretty convicted that this is the level that if we're going to see downside and we're going to see continuation, we're going to be at 22K sometime later this month, this is the spot, But
yeah, for sure the spot.
I tend to agree, Max. Like if you're gonna hammer, this would be your place to hammer. But man, like I just kind of threw this up, man. I'm just kind of looking at it from like cleared chart, redoing everything, kind of looking at your demand zones and so on and so forth. I mean, you got the higher demand, you got the lower demand zone right here, and you're kind of diddling in the middle between price ranges, right, at the moment. So does price mark down or does it mark up? And I think this is the biggest argument for a lot of people. But I do like this support here. I really do like this support between these two. And like I said, if they continue to hold here, they could retest the highs. And look how perfectly they touched this high from these body candles, right? They just came up and just kissed it and then ran back down and rolled back into the lows. But my thoughts are, if anything, I think for your most bullish case, they're going to come back down and probably retest this high, right? Which would put you right around in 24,293, which I think is something you were talking about, Max, for a little while, was around that price range. But I'm more in the boat that they get below this price range, they lose support from buyers and they start trending lower.
When you get acceptance back into that previous range there, that's a problem. And that's why I've been a little bit confused on people that are overly eager to bid 22, 23, 24K. Yeah, I think in the short term, it should provide a certain degree of a bounce or support. But when you get acceptance back into that previous range, Will, I think your range high is like 25 and change right there. Maybe I can't see the exact level. That range high there, man, that's a problem. That's a big problem. Because there's a lot of air beneath us right there.
This is what I wanted to add, Max. I'm really curious how many. When I say how many, I mean by size. What are the values of the liquidations which we're gonna see under 24,800? I mean, can you even imagine how many people rest their stop losses and their liquidations under 24,800? I mean, I think it's gonna be a cascade. I'm not saying that they're gonna hit. Have no idea. I mean, we're gonna just rip through 27,500, 28,500, and we're gonna go just fucking bullish from here to 30K and Valhalla. No, I'm just saying. But can you imagine? I mean, I'm looking, and I'm also looking at the chart between 25,000 or 24,800, like the June lows, up to 22,500 is nothing. I mean, it's nothing.
Check out the. I guess it's not showing on now. I'll share this tab. There we go. All right,
Evan, you crack me up, man. I'm sorry, Evan. You just crack me up, man.
You gotta love Evan, man. You gotta love him, man. We should have him on. We should absolutely have him on one of these.
Yeah. Check out the Apple play though.
We have Evan on, man. It would be fun to have Evan on with, man. That'd be so fun. All right, Evan. So, we'll get in contact. Go ahead, Will.
I think this is very vital for a lot of people to pay attention to. I keep bringing this up. People keep on fading it, yada, yada. Now, I will say this in regards to this. You do have the uptrend here. If they can get back into the range off this uptrend, great. You could probably break out higher. But I really don't like seeing Apple below the A, right? I don't like seeing that. I think it's we can call it a deviation if you're a bull. We can call it a trap if you're a bear, but you got the retest of the high resistance, and to me, it's a rollover move on a higher time frame.
It's interesting, Will, to see Apple at what I would consider to be an inflection point or potential like distribution with a deviation above that previous high. On top of that, Nvidia, like we talked about yesterday, Nvidia starting to show some serious signs of weakness.
Stay 1 second on Apple, because sorry, Max, 1 second. Can you stay 1 second on Apple? Yeah. Sorry, Max, I just saw some thought.
No, you're good. Go ahead.
It really looks like Bitcoin on daily. This one, like it's like the top from April, and now it's like the top from July.
You're talking about the 2021 Bitcoin high?
Yeah. You're talking about the double top on Bitcoin, the 64, then 69K.
We were saying that yesterday.
We've been running fractals.
But even the last one, even the last run up. So I'm talking even. I was looking back on that one, but even the one now the last move, which we had like July. The top from April. Yeah. Yes, the top we have from April is where he has the A, and the top which we have from July where he has the C marked there.
Mm-hmm.
Yeah, this is what we call just an atypical ABC, right? It's where the market. the market takes a predatory move, it pulls out, rolls down, scares people out of the position, pulls back higher, traps liquidity, traps it again, and now we're sitting below that resistance again. I don't really like the fact that they came back into it right on the weekly up here and now rolling back in, because this could be a break move to the upside, right? If they continue to build this structure up. But also, my thoughts is that, we're below resistance. So I have to take this as a short trade if I'm going to take it as anything. You've also got the structural lower highs here, which is another kind of red flag here, because, I guess when you look at it from bullishness to bearishness, there's more bearish indicators here than there's bullish. The only bullish indicator I have here is an uptrend, right? The bearish indicator I have here is I'm below resistance. Bearish indicator I have here is that I'm also forming lower highs. Bearish indicator here is that we basically, have deviated above previous resistance, and now we're back below it again. Like there's 3 to 1, right? So when you look at that from an odds perspective, it's a 3 to 1 odd that this is going to be a short trade versus a long trade, based on those 3 different things that I just named. Now, some people could take this how they want as far as Apple goes, but Apple looks super bearish. I mean, Nvidia is another one too that I've been kind of eyeballing, and I've had this out with so many people, and they always want to fight me on it. And I'm telling you, people fought me on Luna. They fought me on Luna, and they learned, and not from me, from Luna. And these are the things that, a lot of people tend to not want to pay attention to until it becomes, and then it's like, how did nobody see that coming? Well, people did see it coming. It's just some people wanted to look and some people didn't. If you go into these markets with your eyes closed, I think you're going to get wrecked. But if you look at Nvidia, and then I'll let you guys kind of run through whatever you want to. But I'm looking at a high time frame distributions up here, right? And I'm looking at a rollover move that I think it's going to roll back. I think it's going to recapture probably right around here, around 372. If you're bullish, that's your bullish support, right? That's your bullish support. That's where Nvidia started showing weakness. That's your retest. If you're bearish, you'll pay more attention to the much higher time frame here, and outside of that, you've got plenty of indicators that this thing's going to roll over eventually, whether it be multi-year or whatever. However it wants to play, it plays. But you've got the bear div here playing out, right? You've got the lowering of strength on the higher time frames against the rising of price. Like Nvidia is not NGL, not a good look, right? I'm just not interested in this stock company. And I pointed this out to other people too, because like some people brought up the other day, hey, this is AI. I'm like, every chip company out there is doing AI. Like this, there's no difference between Nvidia is doing any better than any other chip company. IBM's been around, just as long. I mean, you got AMD, I would arguably say, is actually leading the market on chips when it comes to performance, right? I don't know why people are so just strung into Nvidia has been a household name for a long time with no interest. And then all of a sudden now everybody's like Nvidia.
Because it's easy, Will. That's why.
Yeah, it's whatever's easy. Exactly. They don't want to look at what's the better trade. They want to look at what's the easy trade. And the easy trade is not profitable. It's not. We could argue and say, okay, well they bought out the low and got up to here. No, 90% of retail probably bought up here. They didn't buy down here.
And they're gonna buy at every lower high.
Yeah. I mean, this reminds me of the Tesla trade. I'll tell you guys, look, on Tesla, sorry, just one more thing. On Tesla specifically, boy, I had it out because Tesla people, they're ruthless, man. They are ruthless. Like those guys will go head to head with you and swear up and down, that, I'm not saying that Elon's not a smart guy, but they act like that's their religion. When we were up here,
bullish on Tesla, man, for that reason, right? You gotta love the cults.
Like,
that's true.
Luna had a cult too. That didn't end well. Suicide cult. But anyways, excuse me. Sorry, I should have said that.
Jesus.
What?
Let's get into.
He's playing.
Yeah, I'm playing. So look, you had the most obvious moves. 1, 2, 3, just continual rejection. And everybody's like, oh no, Tesla's it's going to $3,000 before it split. And I'm like, okay, we'll see. And then what did it do? Puke, dropped down, came back up. I told people again, hey, take your shorts. Boom, 120. That was my target, right?
They bought the lower highs, like I told you.
It dropped to $100. Like these people got destroyed if they were long in Tesla. Like longs were obliterated. That's why Tesla reversed. It has nothing to do with intrinsic value. It has to do with the short trade was just overtraded.
That's why Musk was crying on Twitter and he was asking Jerome Powell to not hike the rates anymore. If you remember that.
So was Kathy Wood. Oh my God, I remember that.
But I think Kathy. You know what I asked? I mean, obviously I didn't get an answer. I just asked, the Bill Ackmans, the Elon Musk's. Where the fuck were you guys last year, or when they were pumping money inside the markets? Why were none of you commenting the fact that they were just ballooning the monetary base? None of you. And actually, Mr. Elon Musk was making fun of the shorts when the same guy who is now, hiking the rates was just giving money to the people to buy his stocks. Where were his tweets then? Why he was not tweeting when Powell was inflating the monetary base? What?
So non-bro says retest. I don't know, man. Like I'm gonna be real. I'm not in the court of retesting lows on Bitcoin. I know everything looks grim. I'm just not in that. Like if we get there, we get there. I don't think it's really the time to entertain it yet. We got
Will, if you get let me just if you get all right, two ranges. If you get back into that previous range down there, I mean, you have the opportunity at least to go retest the lows. I don't know if that's going to happen. I think something would probably have to go wrong. I mean, my first area
would have to go wrong though, Tucker. I don't know if something would have to go wrong. Like something nothing can go overly right. If we're just talking about
nothing can go overly right. But I mean, I think if we were to go down there, inevitably you would have curve probably blow up, and that would be something that went wrong. But we could go down there either way, right? Like
I think just entertaining it's fine, but assuming it or guaranteeing it is not right. I
mean, dude, look, like this is the area, right? I did the video on it. Bitcoin corrects 30 to 50% every pre-halving year. There's your 30%, right? CME gap, mid-range of this lower bound range, 22K conservatively. That's the least that it corrects during bear markets in the pre-halving year, right? If you want to go to the max, it's half.
I mean, Tucker,
hang on. This is really important, guys. This is
is it breaking news?
Breaking news, guys. Something just came up. This is a serious problem, guys. This is an issue, guys. We don't have enough likes on this video. Guys, thank you so much for being here on your Tuesday. We got 52 people watching. We got 28 likes on the video. Big day today. We have special guest, Mr. Spread. First of all, big thank you to Mr. Spread. Second of all, if you guys are enjoying the stream so far, please consider liking the video. It really helps that robot at YouTube headquarters take a liking to us. And as a young channel, we need that robot to like us. So if you guys want to support us, please consider smashing that thumbs up button for us. Wow, look at you guys already, 33 likes on that. Additionally, if you want to get to know Mr. Spread a little bit better and you don't know who he is, definitely worth a follow. His Twitter is in the bio of the video, so go and give him a follow. I'm sure most of you guys follow him by now because he's in our Twitter spaces all the time, but if you don't, he's definitely worth a follow. You can learn a lot from him. But thank you guys so much for being here. 56 people. We're up to 36 likes. I think we'll run 50 likes today. I have a feeling we're going to get to 50 likes live on stream today. It feels like one of those days. It really does. But sorry, I'm Tucker. Go back to what you were talking about, man. And we just had breaking news. When breaking news hits, we got to talk about it.
You gotta talk about it, right? So, I mean, look, pretty base. I'm not gonna go through the BLX and do the whole video again, but 30 to 50% every single pre-halving year, excluding COVID, right? So pretty reliable stuff, right? So there's your 30, right? I know, Max. Address that in a moment.
Sorry, Mike. We'll get to your comment, man. Very constructive. We'll get to your constructive comment.
Very constructive. All right, there's about your 40 would be a sweep of that 19K USDC FUD wick. And if things really got nutty, right? I mean, 50%, you can imagine, right? It's basically a double bottom. I mean, one of these three is going to play out, in my opinion, given the tail risk we've been stacking up with Curve and Binance and the equity market showing weakness and looking like high time frame distribution. We've got Tommy with the lunar cycles. Like, I mean, I just don't know. I don't know how you can ignore these things. You know what I mean? We got macro not looking good. Like, I mean,
so let me ask you this, Tucker. Would it make sense to try to bid that CME gap?
Yeah.
Would it make sense to try to bid that CME gap? And then for me, I think that I think we lost Will.
I mean, I would stay hedged, right? Like if I'm short, which I am, like I would stay hedged. I'd bid spot at the CME gap probably, but I wouldn't like fully size in by any means, but I'd keep the short open until it was invalidated and you got back above like 25K. But yeah, I mean, I think I would probably bid. It depends on time, right? Like if we go to 22K tomorrow, I'm probably not bidding, right? But if it takes like 2, 3, 4 months, then I would probably think about it for sure.
One thing I would like to add to what Tucker said and to your question, Max, I think a lot of people joined this space, trading space in general, but especially crypto space after COVID, and they haven't suffered the lesson from the markets. They didn't swallow the humble pies. So they have this recency bias, and that's why I wrote that thread, the Pavlov investors, and they have it. Every time you just buy the dip, buy the dip, buy the dip, because they were strategically trained by the markets and also by the Fed with their policies that, you know what, Fed is going to come and save our ass. And that's why also I'm asking how much or how many from the market participants, especially in the crypto space, are ready to suffer for another 2-3 years. When I mean suffer, not necessarily going down, but just go to 22K, go to 27, go to 24, go to 30, go to just sideways markets for another 1 year from now. How many of the market participants are ready? And the problem with what's going to happen is that if we're going to go to 22K, most likely a lot of people are going to again buy the dip with no confirmation. There is no problem if buying the dip. It's okay, but wait for the price to stabilize. Wait for the price to recover from some previous levels or above some previous levels. Reclaim some structures. And like I said, I mean, okay, now it's 26. What's the problem in waiting to go above 30? Do you think that this 4K is going to make such a difference when Bitcoin is going to be 100K plus? It's like, this is the problem. This is what I mean, okay? It's like, okay, it's going to hit Bitcoin. It's going to go 22K. Is it going to be a good place to buy for the next 3 years? Obvious. But it's like, can it go lower from there if it's already in a bearish structure? Obvious. So if you're thinking that is a good place and you don't care about the next 3 to 5 years, that's good. Go ahead. But in the same time, you also have to think about the whole macro landscape, like you guys said. And after Tucker is going to finish, or when I'm going to have a little bit of time, I just want to talk about the liquidity, because liquidity, and I'm going to say it over and over again, maybe at least one person from the audience is going to listen to this and is going to stick it to his mind and tattoo it to his brain, that liquidity is the main fuel for any assets. So if we have liquidity shrinking in the global markets, except what BOJ is doing in PBOC, I don't see risk assets going much higher without liquidity returning, especially to TradeFi.
Yep. I do have I guess a bullish bias towards liquidity, or a bullish thesis, we can call it.
Sure.
Oh dear, let's go.
And I want to throw it out there. I want to throw it out there just for entertainment purposes. Okay. Now we all can feel differently on liquidity, but my thoughts are specifically with liquidity, especially with M2 and M1 and so on and so forth, global liquidity, local liquidity. There is the thesis that a lot of people aren't looking at, and that was the money injection that occurred in 2021 and 2020, and that money injection essentially is being soaked up, but it's not soaked up, right? Like, that is what is supporting these markets. That is why markets have flipped back up. So even though money supply is dropping, it looks more dramatic than it is. because of the amount of money that was pushed into the economy, and not just on a business level, but on a personal level, on a retail level.
Well, let me comment on that real quick. I would argue that it's potentially less correlated to the decreasing money supply and more so that interest rates are lagging. So in order to actually see that monetary destruction or debt destruction, we have to just let them sort of work their way through the plumbing of the economy. So the initial sell-off that we had in 2022 was the fear of rate hikes. We didn't actually feel them yet. It's not like they kick in instantaneously.
Yeah,
this next wave down, in my opinion, is going to be, we're going to see a rise in delinquencies. We're going to see defaults across the board. We're going to see people like forced selling assets, even maybe single family homes. We're going to see unemployment start to creep up. So these companies are actually going to be squeezed by the interest rate hikes, and we're not going to sell off on hypothetical fears of what happens 2 years from now, which is, I think, why
it's only going to be forced. Anybody who's forced will be out, right? Anybody who's not forced won't be, because nobody's going and dropping a 3% home loan to go get a 7% home loan so they can make a little bit of money on there.
No, but they'll drop a 3% home loan. They'll drop a 3% home loan on a house that they paid 25% over the true value of the home if they lose their job and they can't afford to pay it.
Yeah, but I mean, if you look at the housing market, though, that's few and far in between at this point. Like, I mean, the housing market dropped 11%. So until either, so one of the two has to give. The housing market has to give, or people have to start getting basically out of their houses.
That we agree upon. But right now, the housing market's at a stalemate. We have the lowest new mortgage applications since 1995. We have the highest, even higher than 2006 to 2009, highest debt to income ratio of new home purchasers. Right now, the average debt to income ratio for a new home application is 40%. At the very peak of the housing bubble in 2008, it was 39%. People are borrowing more money than they ever have. And a lot of that's not fixed debt. A lot of that is credit card debt or personal loans, like predatory loans. Stuff that's really going to put people belly up. So I'm just saying the home buyer, the consumer, is not in a good spot.
What does VNQ look like? That's
yeah.
housing ETF.
I agree with you, Max. Like, I think in that scenario, as far as like, we'll say debt to income, yeah, that makes sense. But like, if we're looking at it from new home applicants, I would highly doubt anybody's trying to get a new home application at 8%, 7%, 6% interest rates on a house.
Bro,
nobody's going to do it. Nobody's going to do it.
No,
even if you could, man. Yeah, it would make no sense to get a loan at that high.
Guys, when it comes to liquidity, because I know you guys were also you played sports, right? Or some of you, if I understood correctly.
Of course, brother.
I also played the sport, and it was a sport with some mass on it, so it was rugby. Now, I gave this analogy to my guys, and I'm also going to give you this analogy, and I'm really curious if this works when it comes to monetary policies. I'm also a little bit chubby, so I can afford to make this analogy. And so I'm going to be politically correct if anybody's going to have a problem with that, okay? Now, for the last 14 years, the Federal Reserve, let's think it as a person who was eating junk food, right? Only junk food, juices, pizza, hamburgers, whatever, and it gained a lot of weight. Like, I don't know, from 90 kilos, it went to 200 kilos, right? Now, this person understood that it's not healthy. So for the last 10 months or so, they started quantitative tightening. So they started withdrawing, and they started not eating these kind of chips and pizzas and burgers. But of course, then the lag effect, which is in here in the markets, is not going to be felt immediately. The money supply is not going to drain as fast as this on the same pace like it was introduced. So someone who gained so many kilos in the last 14 years is not going to lose the same amount of kilos in 10 months from now. So this money that is accumulated in the money supply, which was ballooned, is the cause for the lag effects that we have right now. So when it's going to drop, for sure we're going to feel it in the economy. But like I said, some time has to pass until we're going to see the real effects on the economy. So this is what I want to say, Will. And I don't know if this analogy is 100% correct. Take it with a bit of grain of salt. But until we're going to see the effects of the rate hikes, some time might pass. And we can also still crab a little bit, and the indexes can stay a little bit higher. But look at the PMIs. The PMIs globally look like very, very bad. I don't want to say nasty words again. In the United States, the PMI is like 47. Okay, it bounced a little bit. So there are signs of weakening. And China, the same. I don't want to bring China because it's too many people talking about it, like too much doom and gloom. However, there are some red flags. And if people don't want to look at them and they want to say that this time is different, well, be my guest.
Oh, I'm not indicating at all.
No, Will. No, this is. Oh, okay. Just that to clarify, it was not to you. It was not.
No,
to you.
I know. I'm just throwing it out for the audience. Like I'm not in that camp at all. I'm never one of those guys. Like I know what the percentage odds are and everything. As far as like in my head, right? We'll just say
there
my
you
head.
go.
I don't want people to be like, oh, you know the percentage. You know how people are schizo. But yeah. Outside of that, you know, like I'm in the camp that things come down. I just think it comes later. Right. And I think that's where I think a lot of people are off a little bit on this. I think we get our bull run probably 2025. And I think after that, you know, the end of the bull run will be the collapse of all this. I think like the money inflation that we've created has kind of created a cushion to make this more of a curve rather than a steep drop.
Yeah,
and that's
there's
what
a lot
of people
more
aren't understanding
out there than people realize, Will. Like I totally agree with that, man. There's
that
still
takes a long time to weed out.
Mr. Spread, do you what probability do you attach to equities going to make a new all-time high before any true drawdown or a new bear market starts here?
Oh my God, you put me in the corner. I said that I play rugby, not boxing. Not boxing, man. Not boxing. Listen, this
rugby player, you got this.
Yeah. Well, I had my share of humble pies from the market. So if I know one thing is just to be, especially in this kind of context, like I said in the beginning of the year to my guys, I think, and I still think that 2023 was and still is one of the hardest year to position yourself. Hardest year. So I take it level by level, Max. And I don't want to say probabilities. And if I'm looking right now, for example, at S&P 500, I don't see it so strong in the last 1 week or two. And Dow Jones, it's already in a weird rising wedge. So I follow one indicator. Besides price action, I like one indicator. I like Ichimoku. And if something, Ichimoku is telling that in the next 10 to 12 days from, let me double check on it. So that's the only probability that I would give. Besides that, I just want to take a level by level and let price talk. What's the lag between the lagging span in it? So it's 25 days out. Okay. So no, not in 3 days. Give me 10 seconds, Will. And I'll tell you when do I see, based on this, 26 days. I had it on S&P 500. Yeah. So around the 21st of September, we should see the next big move on equities. However, Dow just looks stretched. And Ichimoku tells me that we are needing at least a local top for now.
Do you have a chart up? Do you have a chart up?
Yeah, you can share it if you want.
Yeah.
I don't trade.
I don't trade them either, but
okay. I don't know who's presenting, but I think I don't know if we can co-present in the same time though.
Oh no, you can go ahead, bro. We can put yours on.
So I've been watching this. Is working? Yeah. So I've been watching this rising wedge for quite some time. You measure it from the low, it's about 19% drop. I'm not saying that this is a given, it has to give and it has to break here. However, this is the measured projected target of this. Okay. So it can be at any of these supports. Either we can stop here, or we can go full goblin down and we can go lower. Because I said about the Ichimoku, bear your eyes because it's a complex indicator and it's the only one that I've been using from time to time. And now I'm doing my best to apply it also on crypto. This is 3 days. 1 second. Like I said, in around how much time that it is from now? Max, you and the probabilities, you just kill me. In the next 10 to 12 days, Dow Jones need to resolve this pattern. And the lagging span, which is the green line, the lagging span should tell us if we're going to go lower. But we have the Kinjunsen and the Tenkan-sen, which already had the crossover. We have the price, which is already in the cloud, in the Kumo. And if it's going to break to the downside and the lagging span also is going to follow to the downside, most likely we're going to start a downtrend from here. So I would say that very unlikely that we're going to see soon new highs if we don't break above what were the 31st. So if we don't go above 35, as long as 35 stays here, I think that the top is in, at least the local top for Dow Jones.
So, Mr.
Have you ever tried?
Why have you chosen to analyze the Dow Jones over the S&P 500 or Nasdaq? Are you deriving more?
Not necessarily. I just saw this pattern on Dow Jones.
Okay.
And it's also super relevant for the United States economy. I don't think that if Dow Jones starts a big drop like this, and we're gonna see it here, I don't think that the S&P 500 is gonna rally.
Yeah, no, I would agree with you. It's one big trade, like they move in tandem together.
I just saw this pattern. I just saw this pattern on it, and I just wanted to follow it. And I have another pattern which I'm following for quite some time, and this is from Germany. By the way, Germany is in dire straits. Like, it's really, really, really bad. Their economy is not doing good. And look, I have it. I think I have it since the beginning of July. I'm following DAX. It's in a big distribution. So as soon
like
as
64K top on Bitcoin, honestly,
man, it was not easy. And it also looks the recent 30K which we had on Bitcoin, if you remember. About 30K we had, and also the RSI was doing like a bearish divergence. So I'm not shorting it. As you can see, I have my plan here. As soon as I'm gonna go under, so when I'm gonna see something like this, I'm gonna pull the trigger. But I'm just patiently waiting. There is too much tail risk, like you said, Max, before we start the stream, to be super bullish on risk assets right now. So if I can have a little bit more of the screen time to show you guys something, because we were talking about liquidity, and I want to explain why I think that it's very, very hard for Bitcoin to go much higher, looking at the current state of the liquidity in the crypto space. And it was about the total caps. So I don't know if you remember in one of the evenings when I was in your Twitter space, I said that this, yes, was liquidity coming to the market. So yes, this was liquidity coming to the crypto space, right? No question about it. Total cap went higher. However, after we pull back, look what happened. So we had the pullback and we had another leg higher, right? But the total cap didn't follow. So the total cap actually went lower. So if we go back, Bitcoin put another high and total cap put another low. This just means for me, and it's basic math, that here we had liquidity coming inside the crypto space because Bitcoin went higher. But on the second leg higher, there was no new money coming inside the crypto space because we had, I don't like to do, this is not technical analysis on the total cap. It's just some important levels, but we had a lower high here. Just means that on this second leg, there was just people reallocating or reshuffling of their portfolios from altcoins to Bitcoin. So for me, until I don't see the total cap taking out these highs, I'm not going to short up until here, but most likely here I'm going to short altcoins, here I'm going to short altcoins, and here I'm going to short altcoins. So there is no new money coming to the crypto space.
I love using total as a true barometer for risk. Well, I mean, because look, what we saw with Bitcoin during the FTX collapse was, it was surprising to me to see Bitcoin go on to make such a significant and pronounced new low, while something like Ethereum didn't. And total basically just swept the previous low when FTX happened. Like, if you go a little bit left on your chart there, you can see the previous low before, right there. When FTX collapsed, total barely made a new low. It basically just kind of double bottomed. Then Bitcoin itself made a significant and very pronounced new low. So I was telling everyone, I have a tweet about it somewhere. I was saying, when Bitcoin was at 31K, I said, guys, Bitcoin looks really good here. Total is stuffed underneath its range high. You need, in order to be super bullish on Bitcoin, you're going to need that asset class confluence. You're going to need to see total break above 1.2 trillion definitively, because right now it's tucked underneath, and that's a pretty sticky level for it. So I love using total. Yeah, I think it's.
I would say it's very worrying on a high time frame when I zoom out and I just look at the whole, when you just zoom out and look at the whole chart, I can't find a chart that looks good without log mode on, right? I mean, they all look terrible on a higher time frame without log mode on. Bitcoin, I think, is a little different to the, I think the range, the lows that we've already set this year could potentially hold, but I look at a lot of these high time frame charts on something like Ethereum or other altcoins, and it's hard not to view it essentially as redistribution.
Very well pointed, very well pointed. And to what you said there, I'm going to add one more thing. If Bitcoin was making higher highs, like we saw here, actually Ethereum was making lower highs. So this was another indication, since we are here, that if Bitcoin is going to drop under this structure, which it had then. So let me put it next to it. So if Bitcoin would drop under this structure and lose the bullish momentum, Ethereum is going to drop even more, because, like I said, Bitcoin was making high and another higher high, while Ethereum was making lower highs. And we know that Ethereum is the altcoin's locomotive. Now, because I had this on the chart, I had it since here, and this again was looking like a rising wedge. It just followed it, and that's it. We had the drop now. The projected target was about 1,000, so a bit shy, under 1,500, but I don't think this is done. But this is something that I don't understand. Again, people bought here and they think that this is the bottom. This for me, so let's just have the replay. This for me is just a bearish retest. So if this move would have been something like this, yeah, no problem. I would say, okay, maybe it's not a good time again to short it, but I'm going to short it up until here. But this, look at this. This is just a bearish retest. There is nothing that I can say bullish about this chart, even if I didn't know what is this chart. I do this quite often, like also Will said, the naked chart, and I don't care about the asset. But for me, this is nothing bullish. Okay, we trapped this one.
When this one sells off, this is going to crush a lot of people. Man, there's so much optimism on this little pump right now. I was looking at Twitter earlier, man. Everybody was so bullish, and it's just a bearish retest, man.
At least they weren't, making up rumors about how a spot ETF could get approved like the next day.
That's the only case, and I'm gonna be honest about it. Short term, although I doubt it, short term means the next 3 to 6 months. That's the only bullish case which I see that can push Bitcoin and the crypto market higher. That's the only one.
Yeah.
Because
the hypocrisy of those people, man. What they do is they say, "Well, I would never short." Betting on a black swan, but then they'll bet on the black swan of the ETF getting approved. And it's like.
And another thing I wanted to share with you guys, this actually, it comes from TXMC. The guy comes also on your Twitter spaces quite often. This is a very, very nice correlation between the United States PMI and Bitcoin chart. And this is really, really good work. And I don't know, this is a lot of alpha. And it's quite following it. As you can see, Bitcoin quite follows this one right now. The PMI is under 50. So if I told you guys they're going to give you a bit of alpha, this is not my alpha. If you want, we can talk about what I found. But if your viewers are watching, this is something to pay attention to. Because it's like unexpected to follow the PMI and to look how correlated it is. Of course, there is some lag. And of course, there is some... difference between them, but if you look at it, Bitcoin really followed the United States PMI, manufacturing PMI.
That's interesting. I haven't seen that correlation before.
Me neither. But kudos to him. It does not belong to me. Kudos to TXMC and XO because they spoke about it in their stream. But this is something that I think is relevant and more people should know about it.
I remember XO talking about that one time on a space. I do remember that.
It's really, really
the
nice.
Only other person I've heard say that. So I think it's good alpha.
It is. And if you guys want the next time or here or whenever, I told you that I have the FFR and the 3-month yields. And this is something that caught my eye. But whenever you guys want.
Sure.
Yeah,
we can have anything else that you want to share.
I see that someone shared something else. So I can wait. There's no problem. It's fine.
This is just Tucker's probably going pee right now. He turned his camera off. I just put his chart on because yours wasn't up there anymore.
Okay.
Yeah.
This is so that alpha belonged to TXM and XO. And like I told you guys before we started, this is something that I was been watching, and it's the effective fund rates. So I'm gonna call it the FR and the 3 months. Okay. Now I've been watching this for quite some time. I think the first time when I started to watch this was around here. And I saw that the 3 months lead the FR, right? So if let's put
gotta run, guys. But
see you, Will.
See you, Will.
And I was watching this chart for more than 1 year right now. So if this is still correlating, we're gonna arrive to this date. Let's put it a little bit slower. We can see that before any meeting, there was a delta between the 3 months and the FR exactly of how much the Federal Reserve should have hiked. So for example, from here, what were the levels? Let me see. So from here was like 1.6. The expected the expected Federal Reserve rate hike was exactly to complete this. Fast forward, the 3 months led, and right now this is where we are. Okay, I'm not going to go through all of it, so I don't take all the time. But as also the chances are showing on the CME, right now there is not enough difference. So the delta between the 3 months and the FR is not enough for the Federal Reserve to hike the rates if this model will apply. So until the 20th of September, the 3 months needs to go here in order for the delta to be enough to have a 25 basis points to hike it. If until there is not going to be up to 5.58, the Federal Reserve fund rate, it means that most likely it's going to be flat out. So we're just going to continue like this and until the next meeting. So that's why I have the next meetings here to just follow this and see if this correlation is going to still work going forward.
Yeah, that's very interesting. What are you anticipating going into the end of the year? Are you thinking that the Fed is probably done hiking? Or, I mean, are you really just kind of relying on this to potentially, I keep putting you on the spot, but I gotta.
No, it's fine. It's fine. This really worked, and this was the only time, as you can see, this was the only time when this model was not working. And we know that models are not perfect, and models work until they don't work, right? So you cannot rely on the 100%. But this was the only time, but it recovered. So going forward, I'm really gonna look up on this, and I'm gonna see if, for example, in the next months, I'm gonna see this here, and this is gonna be here. Most likely they're gonna hike, or this is gonna be here, and this is gonna be here. It's gonna be enough delta, the difference between them, to hike it. So we're gonna see this going like this, and after that 3 months going like this, and you see if the delta is enough. So based on this I don't know, piece of alpha that I cooked up, I will follow it and see if the Federal Reserve is done hiking or not done hiking with a higher probability of success.
Very nice.
And based on that, of course, I'm going to apply it to my framework, and I'll see also what are the next moves. But, for example, Jackis had another piece of alpha. He had the super cycle commodities and the correlation with Bitcoin. This helped a lot, and I was discussing and debating with him. If you remember that evening, I said that silver has a big resistance around 25, and also gold has the big resistance. So if precious metals lead, well, you see what happened with precious metals, and if they lead Bitcoin going forward, you take the conclusion.
I want to ask you this, Mr. Spread. So I really enjoyed Jackis's analysis or comparison, and it seems to me like he predominantly views Bitcoin like a commodity, and that's why he draws these correlations between gold and silver and maybe palladium or whatever other metals he watches. But my concern for Bitcoin is if the US, or the global economy does enter a true recession, and Bitcoin is so correlated to liquidity conditions, or basically tethered, no pun intended, to risk assets in the equity markets or TradFi, how much credence do you give the argument that Bitcoin could sort of decouple and begin trading like a commodity during a recession rather than a risk asset? Because for me, it seems difficult. Like, I hope that it happens. I hope, just like gold, during times of uncertainty, people have bought gold and they've used it as a hedge against economic turmoil or uncertainty. I hope that they'll do it with Bitcoin, but I'm just not entirely convinced. I'd love to get your thoughts on that.
Very good question. The only time when I saw an anomaly in the direction that you said, it was this spring when we had the Silicon Valley Bank failure and when we had the First Republic. But in my opinion, and I said this before, I think it was just a reshuffling of portfolios from the big players in the market. So most of them, or a lot of them, had portfolios and they had exposure to the KRE, which is the small banks ETF, or to the small banks. And I think they just reshuffled and they looked to the top performers, which, if something bad would have happened, if Federal Reserve didn't intervene, they would have had a smaller drawdown than they would have had if they were inside the banking system. So I think that the similar thing happened also to Bitcoin. When Silicon Valley Bank failed, when First Republic failed, we just seen a reshuffle to the tech sector, and Bitcoin is very correlated to the tech sector. Now, going forward, this is going to be, I think, if we're going to see this economic downturn, which we were speaking about, this is going to be the first time when Bitcoin is going to face a real test. Because since its inception, Bitcoin didn't face any real economic downturn. I mean, 2022 was not a real economic downturn, was it? It was just a V-shaped recovery. So I think this is the first time when we're going to see a real test to Bitcoin, and we will see what type of asset class it is. If it's a commodity, if it's a precious metal like digital, or if it's going to act still as a risk asset. If you ask me, not the best, but it's good to have a little bit so you're not going to get surprised. I mean, a little bit of exposure is going to save you from big emotional decisions. If you're overexposed without knowing what's going to be the outcome, because nobody knows how it's going to react in the future, I think that you're also exposing yourself to a high emotion environment. If you're not exposed at all, again, you're also going to be in a high emotional environment. What I think is good to have some exposure, like I said, throughout this year, only to Bitcoin, and I'm not a Bitcoin maxi at all. But it's also good to have a big chunk of dry powder because there are too many tailwinds going forward. And we don't know, like you said, Max, we don't know what type of direction or angle will Bitcoin choose in case if we're going to see a big economic downturn.
I'm glad you mentioned the, the difference between Bitcoin and how it could trade versus crypto in the future, because I that's kind of something that I've been thinking about over the last few weeks is, if we do experience the type of, continued constraints on liquidity, or you have, more material downside in markets, it kind of forces Bitcoin and crypto to, I think, pick a lane, right? Like, we're going to find out if Bitcoin's going to catch a bid from people who view it, institutionally speaking, as a commodity, and I think Ethereum will probably catch the tech bid in the future, right? And crypto probably the same. And one of the things I've kind of been saying about altcoins is that, I mean, a lot of them will probably go to zero. The ones that are effectively don't have a lot of users, they never really intended to in the first place. I'm talking about something like Near, for example. Yeah, no, I mean, I think some of these assets will be able to catch a bid in the future, but they'll trade more like blockchain companies than as crypto assets, right? So you lose that beta to Bitcoin. And because liquidity is more constrained in the future, you have to be a little bit more particular with where you park your capital.
Very well articulated, and I cannot disagree with what you say. But maybe I just can add a little bit of my thoughts. I really think that a lot of big old school market participants will want to join this space. And I think there are a lot of patterns in the United States and also globally. And we see old players and old institutions in the market who want to have exposure. Now they're going to get exposure, of course, to real blockchain projects with real utility, like you said. And right. I know I'm going to sound like a cynical bastard, but I love bear markets, man. I love bear markets because it cleans this space, and I said it on the space again. It cleans this space from a lot of bad actors, from a lot of angles. Influencers, content creators, projects, tokens, shitcoins, etc. And the only ones who should survive, also traders and also investors, are the ones who were prepared and are prepared. Because you know what, the tide is going out, and we're gonna see who is swimming naked right now.
I also like bear markets because it's kind of the standpoint of, sometimes things have to die in order to be reborn. Bull markets are the exact same concept.
I agree 100%. I agree. What I wanted to say, and one more thing I wanted to add, is that I'm very bullish on the dollar. As long as the dollar is going to stay above 103, so I'm going to bid it here. I really hope we're going to see another drop there. I'm going to bid it here, and I think even like a week here. So bid means that I'm going to short euro dollar, I'm going to short the cable pound dollar, and I'm going to go long on USD JPY. Maybe a little bit more concerned on USD JPY because this is the BOJ intervention area. So the last time when we had it between 147 and 150 was the place where Bank of Japan had the intervention. And guess what? I think it was 4 days ago, Ueda, who is the Bank of Japan governor, again, they said something about their fiscal policy, and we saw what happened. It just tanked. So I'm really bullish on the dollar going forward after we broke out from this downtrend, which is also on weekly. As long as it stays above 103, I'm bullish. So I'm gonna sell euro. I'm gonna sell the pound on every rally that they have, rejected rally.
We got to get Jackus on here, man, because he's super bearish on DX.
Yeah, I saw, man. I saw. I respect the guy. Listen, he's a smart guy, and I respect him. And as long as the debates are respectful, and as long as we all of us, we share our views in a respectful manner, I have nothing against. I really want to have this type of podcast with Jackie also. Would love to hear his views.
We'll work on that. Yeah. We'd love to get you both on at the same time. That'd be fun because it's you're both very smart. You're both very articulate. You can both back up your theses for your investments with a lot of concrete data and fractals and technical and fundamental analysis. But you guys right now are on polar opposite sides of the DXY trade. So I think it'd be a really great debate for sure. We'll try to work on that.
Yeah. I'm open to it, and I will be very glad to have that debate with Jack is here.
Cool, it'll be fun. All right, Tommy, I'd say this is it, man. We gotta save some alpha for tomorrow's stream. So let's call it here.
For sure, we have CPI tomorrow. I cannot wait to see how that prints, how that impacts markets, and of course, how we're gonna break it down and analyze it going forward. Shout out to you guys for being here. Shout out to Mr. Spread for being our guest today. Had a great time on the show. Hope you guys enjoyed the content. A reminder, if you really enjoyed the content, we do have links to some of our premium content in the description of the YouTube video below, as well as the link tree of our Twitter bot. I think that's all, guys. Until CPI tomorrow. But once again, shout out Mr. Spread, and thank you guys so much.
Thank you, guys. Thank you. Have a wonderful day. Bye, guys.